back. Today, I'm joined by Dane Wilson of Lender's Choice Credit Solutions. Dane, appreciate you joining us.
Thanks for having me.
I thought we'd start just real simple. Have you tell me a little bit about your background and what you and your team do for your clients.
Absolutely. So I own a family-owned business. We do personal finance, credit repair. We also do some business credit-related things as well. A lot of it's kind of putting together a financial game plan for clients. Most of our clients are coming because they're wanting to buy a house. So they come from loan officers or realtors. And we basically put together a game plan to get them from A to B as efficiently as possible, mostly around credit. So, if they have any sort of consumer credit issues, or it might just be an education thing. I teach a lot of credit education classes, and I'm CE certified to teach realtors. So I do a lot of credit education for consumers and homebuyer seminars. I've been doing it about 9 years as family-owned business. My dad was a loan officer, and then I believe he was in just the credit industry for about 20 years.
Oh, wow.
So that's kind of what I've done since college is, got jumped straight in. So.
Okay, great. So it sounds like a lot of background, a lot of expertise, educational component, which we're big on. Obviously, like this whole, YouTube endeavor is designed to educate folks kind of just starting their financial lives.
Right.
So when you say credit repair,
Yeah.
maybe someone out there is going, credit, I didn't know my credit could need repair.
Right.
So could you define that for us?
Yeah, so just to give you some examples, the types of clients we see a lot, we say there's kind of a difference in somebody who might need credit repair. There's circumstances and situations, meaning maybe a divorce, maybe a medical situation happened, you lost a job, got laid off, or habits and behaviors. And sometimes that's just us being young and making not the best decisions, and and then having to sort of figure out how to recover from that. Again, the most efficient way, because not all advice is one size fits all, and sometimes you might try to sort of build your credit up on your own and not know exactly the right steps to take, what to focus on, what to not focus on. And so we just put together a game plan in that regard. And so an example I could give you, I've had somebody who went through cancer and they just didn't work for a long time, or maybe even the spouse, or someone lost a loved one. And the last thing you're thinking about at that point is your bills and your debt obligations. And then you get to the next phase of life and you're trying to rebuild. And again, most of the people we see are going to be homeowners. So we're just helping them sort of sort through anything that's gone to collection, that's been charged off. I got a call yesterday of somebody who was getting sued over a credit card that didn't get paid during COVID. Okay. So it's just kind of helping them figure out, the best way to sort through that, again, to get back into a good financial position as quick as possible, because sometimes there's a lot of ways of getting something done from getting A to B, but again, the most efficient way. So what to focus your time and money on, and then maybe what to not focus on at all, or what to leave, or that sort of thing.
So I kind of want to spend some time and kind of dig into the what, as far as like tactically, like how you guys help your clients. But before we do that, I'm thinking about maybe that young person kind of just starting the career. For all they know, maybe they don't have any credit.
Right.
Maybe you could talk to us about the why. Like, why should people be concerned about their credit, or why does it matter to the kind of average person?
Absolutely. Great question. So if you're sort of, just like if you're building a business, you kind of start with the end goal in mind. So if you're doing that with your life, you're thinking about, I want to have retirement saved for, I want to have these types of investments, I want to, be able to pay for my kids' weddings and college and that sort of thing. So if you're sort of starting from the end and working backwards, getting yourself into a good position credit-wise could totally change the trajectory of your life for several reasons. One is, if you get into a lot of consumer debt early on, you're always going to be, a large portion of your paycheck is going to be going towards paying that debt off. Yeah. And that's money that you're not saving. So why do we save? We save because we want to invest, right? If you're just saving $100 a month, some people might, I'll just go ahead and get a nicer car, or or whatever, because maybe $100 a month doesn't sound like a lot, but that invested over time is. And so, if you've listened to Dave Ramsey before, you know that he tends to sort of focus on maybe your fixed expenses and giving stuff up and sacrificing. And of course, there's situations where that's totally necessary. There's also areas, though, interest rates, insurance premiums. Just to give you an example, on average, somebody with great credit pays $100 less per month for auto insurance than somebody with poor credit.
Interesting.
So that's something we all have to have, auto insurance. So if you're saving $100 a month and you can invest that over time, along with interest rates. I've talked to people who have paid 16, 18% interest on auto loans. So,
Wow.
That over time,
Wow.
exactly. You're buying it's like buying two cars for one.
Okay.
Instead of 2 for 1, you're paying 2 cars for one.
Okay. So again, kind of thinking about that person just starting off and they hear this word credit and they go, well, what is it? You mean like my credit card? But you mentioned some other things. You mentioned about like insurance and things. And so what all falls under that umbrella of like a person's credit?
Okay. So when you get ready to go finance something, let's say you're going to buy a car or a house, or maybe you want to apply for a credit card, they're going to run your credit to check your credit scores basically. And that's determine your credit worthiness or your likelihood. Really, a credit score is your likelihood of default or to go 90 days late on a debt. And so credit scores range from 300 to 850 would be the perfect credit score. And how you manage accounts that report to your credit report, like credit cards, your home loan, your auto loan, student loans, things like that, that determines where your credit score is. The higher your credit score is, the better interest rates you're going to get, better or lower insurance premiums you're going to get. Also, when you have credit, you may not have a deposit, if you're renting when you move into a new rental. And so credit really is, your consumer credit, your personal credit score is, kind of ranks you and your credit worthiness to be able to borrow. Because if you have low credit scores, it'd be like me asking you to borrow money and you sort of coming up with a way to determine what is the likelihood that I'm going to be able to pay you back, and then making your decision based on that. So you're looking at history, your past history, to determine the likelihood moving forward.
100%. And I think that's super helpful as people to understand this concept of like, okay, like if you were going to lend someone money, you would want to know they're good for it, right? So like, what would you do? You would look at their track record and everything. And so you mentioned this concept I'm sure people have heard about, but maybe you could speak to a little bit more, is the credit score. What is a credit score? What all goes into it? How can you improve it? All that.
I think maybe a lot of people have heard of FICO scores. That's kind of the score that lenders use. And again, it ranges from 300 to 850. And so, most of the time, if you're 740 or above, you're getting the best interest rates. So, I mean, you're saving a lot of money. Right now, we see that right now when people are buying houses, because I was able to lock in at a time when my rate was 2.85. Wow. Now people, are trying to get in the fives, right?
Right.
And so when your credit scores are low, you don't even have that option. You may not qualify at all, or on an auto loan, maybe somebody with the best credit scores, or 3%, 4%. Somebody up, lower credit scores are 12%, 15%, or even more. And so when you do the math on that, there's a big difference. But credit scores, they're basically broken down into 5 categories.
Okay.
Yeah, payment history, that's the biggest percentage of your credit score. That's 35% of that 300, 850, 550 available points. I know it's a lot, but so just think about like a pie chart. You got 35% your payment history. So it's any missed payments, any collections, anything derogatory, that's going to bring that down. And when you make your payments on time, that improves that category, that you maximize what you can do there. The next category, amounts owed, has to do with your credit card utilization. So if you have a credit card and let's say your credit limit is $1,000, you want to keep your balance as close to zero as possible. And we can get into the sort of debt management side, but ideally just pay your credit card off, right? Then you don't pay interest. It's not costing you anything. But you certainly don't want to have a high balance. If it's maxed out, that's hurting you as much as possible in that category. There's a lot of myths out there. I'm not sure where this came from. Maybe the credit card companies put this out there because it's good for them. But
this should be good.
Keeping credit card. If you polled 1,000 people right now and said where should you keep your credit card balances compared to your limits, they would say 30% utilization. So $300 balance on it. But that's not. That's everything over that for sure. Your scores are going to continue to drop, but that's not even maximizing your scores. That's just giving money to credit card companies.
Interest,
exactly.
Right.
And it's not benefiting you in any way. So my advice would be pay credit cards off. But, if you're maximizing your scores, you might, in some cases, leave a very small balance. But we're talking almost single-digit utilization, so less than 10%.
So those payments,
those are the utilization, 2 big categories. So that's 30% of your score. Just to quickly move through length of credit history. So some of that we can't do a lot about. It's just really if it's important to you to build credit, and it really should be for all of us, as early as you can, you open up a secured credit card, and then you keep that.
Just keep it.
Keep it. Don't close it.
One question I'll jump in there is like sometimes clients will ask, hey, I've got this old credit card. I've had it forever. I don't use it. I'm thinking about closing it.
That would be the worst possible thing to do
There
in
you
terms
go.
of improving credit. And that's a great question. I get asked that a lot at homebuyer seminars, because let's say, you're right out of college, you're going to get your first credit card, or a lot of times in college, it seems like people get credit cards. And you go apply. What are you going to get? You're going to get that $300 limit credit card with a $5,000 annual fee. I'm exaggerating, but not the best credit card in the world, right?
Not very credit worthy at that point.
Exactly.
Too, right?
You haven't proven much.
Yeah.
And there's not going to be any rewards, cashback, or travel miles or points or anything like that. As you get older and you build your credit, then you start to be able to get approved for better cards. So if you're going to cancel one, which one are you going to cancel?
Right, the one with the worst terms.
Of course.
Sure.
Why? Because you're not using it. But that would be actually the one that's helping you the most. And that's why I say go get a credit card instead of go get a loan. Personal loan, let's say you got a $500 personal loan to build your credit. You're going to pay that off in a short period of time. You're going to pay interest. But when it closes, you got to go, what, are you going to go get another one?
Yeah.
So really, once you get a mortgage, that sort of takes care of the installment loan or the installment side. But revolving is like a credit card is something you can get and you can keep open forever. As long as there's activity and you're using it, then it'll stay open. And that's going to give you that length of credit history. And that was good that you brought that up.
Okay,
That's,
so that's your
really great advice for anyone.
credit history. A couple more to go.
Yep. So types of credit, and that goes the installment and revolving, just kind of having a healthy mix, it's called. I would never advise anybody to go out and get an installment loan just because it's 10% of the score.
Just because.
So don't go buy a car because of the the 55 points.
Yeah, Dane told me I needed to install
exactly.
it. Yeah.
Exactly. And then the other side would be the revolving, which would be credit cards. But I've seen someone if you don't have any credit at all, nothing on your credit report, you have a score as a 0. If you go open a credit card, it's going to take 6 months to register a FICO score. But when you do, you come in typically in the low 700s. So it doesn't take a lot to already have good enough scores to get approved.
Yeah.
You definitely want to continue to build, but it doesn't take a long time to build or to get, to a pretty decent point. So you don't have to go, get a bunch of different accounts or anything like that. Really, once you have a couple open established accounts at that point, keep those open.
Yeah.
You don't need to open any more in terms of building more credit, and you definitely don't want to close them either.
Yeah. Okay.
Yep. On the installment loan, that sort of takes care of itself, because auto loans, if you do finance a car, you're going to pay it off. It's going to close. And then even mortgages, I get frustrated because my mortgage will get sold. And
Right.
Because it closes and it shows that, a new one opens up. So.
Okay, so keeping that healthy mix between the two is going to
And then the last one would be like new credit or inquiries. Every time you apply, they run your credit. That can ding you a little bit. That can affect your score. That's the last 10%. So that's kind of the pie chart. The main two things: payment history and then amounts owed, which is mainly credit card utilization. The other part of that is your balance to limit ratios or balance to original loan limits.
Yeah.
So if you have an auto loan and you just opened it, the balance to the original loan limit's going to be, but it's not like they're even in that 30% category. Credit card utilization by far. Revolving debt is what can have a big impact on your score. If you have a credit card and you max it out, you could see your scores drop 100 points, because obviously 30% of 550 is more than 100. That's a big percentage of it.
So let's maybe kind of look at a case study, if you will. Like, let's say you said a lot of your clients come referred from realtors, right? So their client is trying to qualify for a loan on good terms. So let's say they have some dings on their history and they come to you. What are some of the common issues that you see when you're kind of doing that diagnostic? And then how do you go about addressing them?
So a lot of times it could be medical related, even using a personal example, when my wife and I have 2 sons, dealing with the hospital and insurance and all that, it can be, and sometimes you'll see something come up on your credit report and you didn't even know. You didn't get a letter. You didn't even know. A lot of hospitals and doctor's offices, they don't have big billing departments like a Capital One would or
Right.
a Amex would.
Yeah.
So it goes to collection. People didn't know. They go to buy a house, they see it, and then now they got to deal with it. And so, yeah, I was a little bit, just based on my experience, I was all over the hospital and the insurance side, making sure, just because you see it all the time. So that's one example, definitely maybe the most common. But it could be somebody went through a rough time in the past. So it could be a repossession. It could be a broken lease on an apartment. A lot of times, you might move out of an apartment and there was a last bill you didn't know about. You move out, they don't have your new address.
It's just hanging out there.
It goes to collection. And then utilities, you move out of a place, you don't get that last water bill or electric bill or whatever, and that hits. And so, it could be things like that. Sometimes it's like a father and son it could be a junior, same name,
right,
same address in the past. It could be that one person's account's reporting on the other person's. I'm dealing with that right now, actually, with let's just say everybody in Texas would know who this person is.
Gotcha.
And it's just a senior junior situation, and
Yeah.
it got mixed up, and so they're having to get it sorted out. But all sorts of things, whether it's credit cards that got charged off, maybe they just got overextended, and now they're to a point financially where they are in a much better position. They just need to sort it out. So there's a lot of ways to do that. It really just depends on time frame, budget, and that sort of thing.
Well, that's kind of what I was curious about, because maybe people out there hearing that and going, well, as soon as you discover an issue like that, isn't it kind of like what's done is done? Or are there things that you can do to
There are things that you can do. So number one, if something goes to collection or if something's charged off, it's going to stay on your credit report for 7 years. 7 years from the date of first delinquency, so that first time you were late. Now, as it gets older and older, it impacts your score less and less. So recency is a part of that. If it happened, last month, that's going to hurt your score a lot more than if it happened 4 years ago. But there are ways to get accounts like that removed from the credit report. It would be something like, sort of two examples I give would be like hiring an attorney if you got a speeding ticket to get it off your record. Not saying you didn't speed, but you could get that off your record. Another example would be sort of, if you let's say you hire a defense attorney to represent you in court. That defense attorney might not be saying you didn't do whatever it is that you were accused of, but you don't want to go to jail too long or pay a fine too big. And this is a longer conversation, but credit reporting, just think about all the Americans who have credit profiles, millions.
Goodness.
Accurate reporting is a big problem with credit reports. And so we'll see these accounts that are already negatively impacting somebody's score hurt them a lot more than they actually should because of the way they're being reported.
Yeah.
Meaning like a date being re-aged, making it look like it happened much more recently than it did. Those types of things make it possible to get it dismissed, to get it removed from the report. And so we go in, we look for any sort of violation or inaccuracy. And if we can get those removed quickly, we do that. If not, then we'll negotiate. Well, in some cases, you negotiate basically a settlement for deletion with the collection agency. So you go in and you negotiate an amount, get it paid, and then, and let's say half the time, a collection agency will go ahead and stop reporting it to the credit bureau, so it'll come off your report. Collection agencies buy debt for very cheap from the creditor, so on average it's like 4 cents on the dollar. So you can go in and negotiate a settlement for much less, and then again, the idea is to get it off the report, because the balance of the debt, like you said, what's done is done. The balance of the debt isn't really what's hurting the score, it's just the payment history itself. Yeah. So getting the account off is what really makes a big impact.
It sounds like what you guys do for folks is very, it's very customized, right? So you meet with folks, you dive in, you analyze, and you go. So it's very much a case-by-case situation.
It is. And that's why I mentioned to you, I wrote a book. It's called Your Credit Game Plan, and it's because everybody's situation is different. And we see advice, or we see what works for other people. I'll get people who say, well, my sister was able to fix her score by doing XYZ, but her credit profile didn't look exactly like yours, or just, financial situation in general, right? So you got to look at what your goals are, what's the most important thing to you, and then really assess where you're at. What types of accounts do you have? What can be done, and then, for a lot of our clients, that are wanting to become homeowners in the next, let's say 6 months, it's what's more important, budget, or, can you sort of pay more towards settling these out, or time, right? Yeah. It might be something we could work on getting them removed with the violations and the inaccuracy thing that might take longer, but be much more affordable than going and paying them off right away. Or if you have credit card debt, same thing. How much can you pay now to get credit card debt paid down the more you can pay, the quicker, time frame. So
Depends on your priority, right?
It depends on the situation, and then, your goal, and then just assessing kind of where you are and what you're capable of doing. And then from there, it's the steps. And that's really, we do free consultations, but it's really the most important thing we do, because I think people sort of procrastinate on moving forward because they're just unsure of what to do, right? It's not laziness, it's this fear of making a mistake, or, what if I pay this and nothing happens, or I heard doing this is bad, or, so once you have a game plan, you realize a lot of times it's a lot easier than you thought it was going to be.
Yeah. So, okay, so talking about the customized service piece, I mean, obviously that is very similar in a lot of ways to what we do in the wealth management space. I will say, wealth management, obviously a lot of what we do is we manage kind of the other side of the wealth and the people who have saved and invested in everything. And, it's unfortunate, but I do feel like the debt management piece, the credit management piece is kind of a blind spot in our industry. So it's great to find someone who does that kind of a work, because every once in a while we'll sit down with someone and do an initial consultation, which is highly customized. And we will see like, oh, they're kind of just starting their journey of maybe they made some bad choices, maybe circumstances have happened and getting them in a bad spot. Okay, I want to ask you about something that maybe beyond your purview, but I'm sure it's something that you can speak to. It seems like when we come across someone like that who has a lot of debt, there tends to be kind of a hefty dose of shame that comes with that.
Absolutely.
So how do you work through that with folks? What's kind of a mindset shift that you can give them?
So first thing is to understand that a lot of people are going through it or have been through this sort of thing. It's very common. I see it from my side, but everything's kept confidential. It's not something we're all talking about or bragging about, right? We're usually the social media kind of thing. You're only showing your highlights or the best case scenario. But, my favorite people to talk to are really the ones that come in sort of feeling that way. I make them feel more comfortable and realize that it's very common, but those are the people that care, right? Those are the people that are going to have success. Really the ones that don't, if you didn't care, if it wasn't as big of a deal, if you don't have that sort of feeling of, am I paying my bills on time? Am I taking, those are the ones that might not really get to the next step. Right. So the fact that you care so much is really a good sign. It means that you're likely to have success, but don't feel that you're the only one going through it, or is my situation fixable? The number one positive message I get at the end of the program is that was a lot quicker and easier than I thought it was going to be.
Nice.
It's not necessarily our service, it's just the process. It's once you have a plan, it's all fixable a lot quicker than most people believe. That it's going to be.
I would imagine that's very encouraging for someone out there who's sitting here watching this and they're drowning in debt and they're going, I just don't want to tell anyone.
Right.
And to hear you say, actually, most people at the end of when it's all said and done, they go, wow, that was easier than I thought.
Much easier. And yeah, exactly. And again, so many people have been through it or are going through it and they're not talking about it. Worst thing you really can do is procrastinate, and that's why I did the book. Instead of saying, just call me, it's here. Here's
read my book.
How to do your own game plan, because that's the main thing, is everybody's situation is different. So taking that information, of course, I would love to work with everybody, but if somebody, again, wants to kind of, work through it on their own, here's the steps to do that and make your own custom game plan.
Okay, so one thing I was going to ask is, for someone out there who's going, yeah, that sounds great. Maybe they're thinking to themselves, well, if his clients have credit issues, how do they pay him? Like, so maybe you could briefly cover
exactly.
how you guys
so
compensate?
that goes back to the kind of where you're at and the circumstances and situations. It's typically something that happened in the past. It's somebody who went through something, at least a year ago, 2 years ago. If somebody calls us and they're currently late, then I'm just going to give them the best advice to get out of that situation. And then call us once you're kind of through that. And then that's when our services come into play. But our clients aren't people who are currently missing payments. We wouldn't say pay us, but don't pay your bills.
Got you.
This is something where, and that's who you feel comfortable helping really to become a homeowner anyway, somebody who's financially in the position now. So imagine somebody who lost their job 2 years ago, and became, behind on bills, and now they're making $250,000 a year. They can buy a house, certainly, right?
Yeah.
And they're in a position now where they can start, and that's what they're ready to do. They go to a loan officer thinking they're getting approved.
Let's go,
The loan officer says, either you can't get approved or you can, but this is how much more. if you take however many months, 4 to 6 months, and you do these things, then, this is how much you'll save. It's a no-brainer.
So it sounds like it's more designed for like once things have kind of stabilized, then you guys can come in and kind of clean up the past.
Exactly.
Yeah.
I wouldn't turn anybody away or if someone is currently, I don't get for, this person's, it's just them having a game plan. They're just maybe one step. And again, everything, but it starts in that case kind of with the budget, figuring out how much your expenses are, what you're bringing in, what your take home is, and then what can you do? Can you make a dent in this? Can we, and if not, then what are the steps? As a Chapter 7 bankruptcy, there's other things that I wouldn't maybe recommend so much, the debt settlement sort of thing. Could get into why. I don't mean to offend if anybody's watching in that business. I'm sure there's people that say the same thing about what I do, because you technically you can. There's a lot of things you could do on your own. But that is just an extra added expense right when you're, in a situation where that's tough to do.
Your group goes in, they clean everything up, find all the anomalies, do everything that absolutely can be done. And then let's say when it comes down to it, the clients just simply got too much debt, right?
Yeah.
They got too much credit card debt, too much consumer debt.
Yeah.
What are some of the strategies that you kind of present to folks to manage their debt and get it paid off?
Absolutely. So good question. I'm going to give you an example. So I had a loan officer that referred. It was actually a police officer, and he had 6 collection accounts and just maxed out credit cards. We were able to get the 6 collection accounts removed quickly, maybe 2 or 3 months. And it's
You
not
just negotiate it down, pay it
well,
off,
some of them were removed because of inaccuracies.
Wow.
So it was using our service.
Okay.
And certainly he could have qualified at that point, but he wouldn't have got the best interest rate. So what we did was, and this again, it's all situational. So I give examples, but everybody's situation is different.
Sure.
What we did was his scores were pretty good. They just weren't going to get him the very best interest rate, and it was all credit card debt.
Okay.
Right. So what we did was we found a very low interest personal loan. We paid off the credit cards because they all had much higher interest rates. The revolving debt the credit card debt is what negatively impacts the credit score. So all we did was use a low interest, maybe 6% personal loan at the time, pay off the credit cards. So his monthly payments can be lower because whatever his minimum was on those credit cards, the monthly payment on the personal loan was lower.
Sure.
The interest rate was much lower, so it's going to save him money. But his credit scores also shot up when we did that, from like a 686 to above a 740.
Wow.
Just like that.
Wow, that's
so
great.
that was just moving debt from one place to another. Now his credit cards are at zero balance. He pays off that personal loan. Of course, if loan officers are listening, they're going, wait a minute, debt to income plays a factor. So there were things that had to be discussed, but in this case, it was just coming up with a strategy that fit that situation. But if in other cases, let's say his scores were lower and he couldn't qualify for that personal loan, then we look at, there's different strategies for paying off credit cards, like debt snowball. You basically list your credit cards in order of balance lowest to highest, and you just get it to zero.
Yeah.
And then you don't have a payment on that. Then you snowball that into the next one. They call it the avalanche, where that would be sort of the way that you actually save the most money, which is just paying minimums on all the other cards and then tackling the one with the highest interest rate first.
Yeah.
And so getting that one to zero. And so really, a lot of people know themselves. They know, what maybe will work better for them. If they feel that they're disciplined enough, do avalanche method. If you feel like, Dave Ramsey recommends a snowball just because he says you get those wins, you get that paid off, and
Psychological
I can see
effect,
that.
yeah.
I can absolutely see that. And it may be a combination of what I did with that example of getting your credit cards paid down to a certain amount. Then when you qualify for the loan, maybe that can kind of help you take it the rest of the way. Because again, it's not just that it helped his credit scores. It's going to save him money because lower interest, and in some cases you may do a balance transfer from a credit card that is maxed out. Maybe you have a high interest rate to a credit card that has, no interest for 12 months, let's say.
Yeah, buy you some time.
Yeah, exactly.
Okay, so maybe thinking about the current environment, right? It's a couple years out of COVID. A lot of people were on hard times. We also have sky-high interest rates. What are you seeing right now? Is there like an uptick in people needing these types of services, or kind of what's going on?
Absolutely. So when COVID hit, we were actually as busy. I didn't know what it was going to be like, but we were actually as busy than ever before. Rates were low. There's a lot of refinances, so we were helping that crowd, while at the same time people started going through tough times, losing their jobs. And so from there, it was like, I'm about to start missing payments, or I am. How do I minimize the damage and kind of prepare for getting to the other side of that? And so now we're like you said, we're 2 years past it, and yeah, I mean, interest rates are high, inflation, cost, everything's more expensive. It feels like just about everything. And so just, again, assessing the situation where they're at and putting together a game plan from there. It all kind of ties back into what your specific situation, goal. And and then figuring out what the time frame is. If you're all the way through it and you're back, you have income again, and you can start, tackling all that, then we just work out a plan to do that. If you're still missing payments, then again, we just talk about what, is it possible within a budget, a certain level of sacrifice or discipline or whatever you have to do to get it taken care of so that you can move forward. Because sometimes that's really all it is. When I hear people saying things like, well, I decided to sell my current house and I'm going to rent for a year, I'm going to stay with family for a year. Those are the things that are really uncomfortable and not fun to do, but it's that little small sacrifice for, so I
get back on track.
Yeah, exactly. Or I'm not going to have another auto loan. My car's paid off. I'm going to ride it out with that for as long as I can. I love that, because those small sacrifices are what ends up giving that huge advantage in a short period of time.
So, of course, we're going to have all your contact information, links, the book, everything. So if someone reaches out, what can they expect in terms of like the first step?
Yeah. So first step, if they go to our website, they can schedule, it's a free consultation.
Okay.
So we're going to have a brief conversation about what their goals are, anything they want to share, kind of questions that they have. But we take a look at the credit report and we sort of match that up again with their goals and ideal time frame. And then we put together a plan based on that. And so, everything that they can be doing on their end, whether it's, open a credit card if you don't have one, here's where to go, or whether it's paying down credit cards in this order based on what we discussed, or, whatever the situation is, here's your side of the to-do list, and here's what we can help with. It just depends. Sometimes it's only a game plan of what they need to do, which means it's completely free. We do the consultation, they get their game plan, and they move forward. But if they're, if we can help, if they see that as a value, then we walk through that process, time frame, pricing, everything like that.
Fantastic.
And that's all on our website. It's all, so they don't have to wait to get through a consultation to find all that out. It's on the website.
Okay, great. Well, Dane, I really appreciate you joining us.
Thank you
It's been
for having
very educational. And so by all means, if you find yourself in this situation, I would encourage you, reach out to Dane and his team. Like he said, free initial consultation, and they'll get you kind of diagnosed with next steps. If you're on the other end of the spectrum, as Dane mentioned, why do we save? It's to invest and to grow. If you're finding yourself in that situation, of course, that's where our firm, North Texas Wealth Management, comes into the picture. Reach out anytime. We'd be glad to help. And we'll see you next time.